Well, look at the Asian markets and they're not looking good. It's a sea of red across the Asian market indices, and that's primarily on account of global growth worries. Tell you what, we got some data coming in from the Eurozone PMI, and that was at a 71-month low, so a near 6-month low coming in terms of growth. We saw a sharp decline on Wall Street. A lot of the macro indicators, be it the US yields, the German bond yields, as well as the US yield curve, which is now inverted, point to some global weakness. And as a result of that, we're seeing some weakness come by in the Japanese index, and there was some flight to safety. As a result of that, we're seeing some strength come by in the dollar yen as well. So the dollar yen has now further strengthened below the 110 handle, and as a result of that, we're seeing a lot of these Japanese exporters not do too well. The Korean index lower by about 1.5% as well. Most of those cuts are led by Hyundai, which is down by about 3%. Similar to the sort of cuts that we're seeing for both Straits as well as the Taiwanese indices. And in an environment like that, the SGX Nifty understandably indicates a cut of almost 0.5%. But a couple of things we need to keep an eye out on. The fact that one, we did fall about 112, 120 points from the highs on Friday's trading session. Secondly, crude prices are now cooling off from levels closer to 68 to around $66 per barrel. So in that regard, how do our markets pan will be very important. As of now, they're indicating a cut of almost 50, 60 points at the open. Still an outperformance as against the other global markets. Let's see what happens.
All right, then let's talk about the US markets. Then on to the Wall Street action. Dow dropped more than 450 points, with S&P 500 posting its worst day since January 3rd. Global growth fears and the Federal Reserve's more cautious economic forecast sparked investor worries. CNBC's Josh Lipton joins us with the key highlights.
U.S. stocks finishing the day sharply lower amid mounting concerns over slowing economic growth. The Dow sunk 459 points, the S&P fell by 54, and the Nasdaq also down 196. Existing home sales making the largest monthly jump ever in February, skyrocketing 11.8% compared with January, according to the National Association of Realtors. Realtors attributing the jump in demand to dropping mortgage rates and home prices. Shares of Boeing sinking again today as Indonesian airline Garuda cancels its $6 billion order for 49 737 MAX aircrafts. This is the first publicly confirmed attempt to cancel an order for the troubled jet. And Papa John's announced its newest board member, NBA legend Shaquille O'Neal. The former NBA star is investing in 9 Papa John's restaurants in Atlanta and will serve as a brand ambassador for the company. That's the action from the U.S. market. Now back to you in Mumbai.
Right, interesting move out there coming in, Shaquille O'Neal being brand ambassador for Papa John's Pizzas. But let's talk about what took place in the US macros. A wave of buying drove the US 10-year yield to fresh lows for the year. Treasury yield curve on Friday turned negative for the first time since the crisis more than a decade ago. That underscores concerns about a possible economic slump and the prospect that the Federal Reserve will have to cut interest rates. This, remember, just a few months after the Federal Reserve was an upward interest rate trajectory. So on that note, let's hear out what Tobias Lekovich has to say.
Well, we have to worry about it inverting. We haven't yet inverted in the traditional way, but when we do, it's usually a 12 to 15-month lead indicator for economic weakness. So it wouldn't necessarily mean the markets would sell off today if we did do the inversion, although again, some fear in any given days is likely to have some minimal impact. But in terms of real economic impact, it would probably be somewhere mid next year. The other thing people tend to look at is things like, did we have peak PMI numbers back a few months? And again, if you look at that one as an indicator, that's kind of a 2 to 3 year lead factor on the economy. So that's not necessarily an immediate kind of phenomenon either. But nonetheless, there is data that would suggest a bit of concern is appropriate. Investors are still pretty skeptical about this rally. They don't really believe that it's totally appropriate. And I would say even discussing with investors on kind of one-on-one meetings, either directly face-to-face or over the phone, we keep hearing this kind of skepticism prevailing, this kind of, it shouldn't have moved this quickly off the bottom. And it just suggests to me that the pain trade's probably somewhat higher. I do think some of the estimate reductions we've seen, they've thrown in the kitchen sink, and we potentially have upside surprises in the first half, bringing the market up to as high as 2950 on the S&P. And then our year-end target of 2850, we kind of drift lower as the expectations for the second half are higher.
All right, then Citi thinks that the investors are skeptical about the rally, but let's move on. Special counsel Robert Mueller delivered his highly anticipated report on Russian meddling in Donald Trump's 2016 election. CNBC's Eamon Evers rounds up the highlights.
According to NBC News, the Attorney General William Barr has received the Mueller report. That would indicate that the Mueller investigation of possible collusion between the Trump campaign and Russia is now officially over, and his final verdict has been turned over to the Attorney General. No word on what that report contains. Presumably, the Attorney General will release some details of the findings at some point in the future. No timeline has been established for the release of that. This is an investigation that dates back to May 17th of 2017. Robert Mueller, the former FBI director, has been investigating and charged a number of officials. He's charged 34 individuals and 3 companies during the course of this investigation. 6 of those are former Trump advisors. 26 are Russian nationals involved in hacking and other misdeeds, according to Robert Mueller, the special counsel. Now, what happens? That's a good question. William Barr, the Attorney General, has said that at some point he will release details. During his confirmation hearing, he said he'll be as transparent as possible, but consistent with current law. The law does not require that this report become public. Ultimately, the regulation under the special counsel statute requires that this report become confidential and confidentially submitted to William Barr. So now we know that Barr has that report. He'll make those determinations. Not clear at what point the rest of us will see what Robert Mueller has found, Melissa.
All right, so this is something that the street will be watching out for in terms of global development coming in out there. But CNBC's Eunice Yoon spoke to the former U.S. Defense Secretary William Cohen and asked him about the Mueller report and how it will affect Donald Trump's standing and the U.S. foreign policy. Listen in.
I'm not sure it will have an impact at home with his core base of supporters. I think other countries will wonder whether or not the president, his own standing has been impaired by it, and whether there are more investigations will be forthcoming, not the Mueller investigation, but whether the state of New York will now start its investigation, whether the House of Representatives will start its investigation. So I think that casts a cloud over the administration, and I think it causes some question in the minds of international leaders as to whether or not the president will be able to carry out whatever agreements he has without having the support of Congress.
Including here in China, do you think?
I think the Chinese will look at that and say that he's the president, and if he makes an agreement with us, we expect that he will carry it out. And frankly, leadership starts with the President of the United States. He has to take the lead and persuade the Congress, which has become skeptical now. The President has raised questions about Chinese compliance with trade rules. And so if you have a Democratic president next time, it doesn't mean they're going to be more pro-Chinese. So this is an issue where the business community becomes very important to say there's a solid basis and a reason why we need to have a bilateral relationship with China. It's in our interest, and it's in the global interest. So that comes from the top.
I understand that your group had in the past consulted with Huawei. Is there anything, do you think, that the Chinese telecom company Huawei would be able to do to try to get Americans to change their opinion of the company?
The policy, the problem has been that Chinese companies, we have found, have been less open, and that comes from its own culture and tradition here in China. They have been less open. And if they're going to do business in the United States to acquire companies, to have mergers and acquisitions, they're going to have to be fully open about ownership. Who owns the company, who are behind the owners, what are the relationships between military applications. And if you don't have complete openness, it's going to be more difficult to do business.
And across the Atlantic, European markets slipped on Friday as worse than expected economic data intensified concerns about global growth or slowing global growth. IHS Markit's flash Eurozone composite PMI fell to 51.3% in March. This compares with 51.9 in the previous month. And the overall PMI was at 47.5, which was at a 71-month low. The French and the German PMI figures also came in below expectations, while Germany's manufacturing sector contracted for the third month in a row, and as a result of that, we saw some flight to safety out there, and the German bonds turned negative for the first time since October 2016. Similar was the cuts that we saw in the British index as well. There was uncertainty with regards to Brexit, but now the can has been kicked down to April 12th. The Eurozone has agreed to extend the deadline to April 12th. This provided there is a consent from the UK lawmakers in the next week. So that is something that the street will be watching out for as well. But the key concern is global growth slowing down.
Well, let's move on to the currency space then. The US dollar edged higher off 6-week low against the yen. This after the spread between 3-month treasury bills and 10-year note yields inverted for the first time since 2007 following weak US manufacturing PMI data.
In the world of commodities, crude oil prices ease coming off 2019 highs as focus shifted to lack of progress in US-China trade talks and a grim economic data coming in from Eurozone and the US reignited fears of a slowdown in the global economy and oil demand.
On a quick programming reminder, CNBC-TV18 launches a special initiative in partnership with the National Stock Exchange on 25th of every month. We tell you how investing in stock markets or equities makes one financially disciplined. This is a monthly program to inform and educate investors about smart investing and enabling the journey to wealth creation. Catch our special coverage all through the day only on CNBC-TV18.
With that, we slip into a short break. Come back, we focus on our markets, all the cues and news you need to know for trade this morning. Keep it with Power Breakfast.